Okay, this is Brent from tradeguild.blogspot.com, and we are reviewing the subscriber list that was sent out on June 24th. Give you an idea of what time frame we're looking at here. Would have been the subscriber list. This would have been the next day. So what I said about NVEC, I said that I would wait for the next pullback because of this long upper wick that you can see right here. Suggested a pullback to me. And we got the pullback the next couple of days with a very nice entry right in here around that 10-day moving average. I like that 10-day moving average around $32. And it has moved up quite a bit since then. As of 7/6, that would be right about here, I think. 7/6, yeah. As of 7/6, it was up 27%. You probably would have considered taking some profits on this formation, which is called a dark cloud cover. That's a reversal formation. If you're a swing trader, if you're a position trader, this trade is really still open if you're a position trader. So we'll see a little pullback to the 10, maybe to the 22-day moving average, and take another look at it there. So let's see what we have next here. AAON, and here we go. This was a play on an ascending triangle with indicators indicating accumulation, including 3C, and I suggested an entry as close to $30 as possible, which came the very next day. And here's the time frame we're looking at. Okay, there's 622, there's 625, list came out on 624. So we got a very close entry over here at about $30.10 or so, $30.20, whatever it may have been. And we got a nice little move from there. So if we run from about $30, I'm going to use this because that's about $30. It's moved up as much as, almost 9%. Not a very volatile trade, but it moved nonetheless. Next up is ABMD, and this was another one that I said was an ugly chart with some support in the area. And let's take a look at here's the very next day after the list came out. We have a little bit of a star right there, so this is kind of what we're hoping to see, a high volume confirmation of that. We didn't get a high volume confirmation, so really there should have been no trade. In any case, stock was below $11, so you would have been stopped on this day. So no trade there, just a shot in the dark, I guess. Let's see what we have next for you here. FTech. Now FTech was, and I mentioned this a couple times, emphasize that this is a counter trend short, not a position trade. Here was the play, a Harami reversal right here. We suggested an entry. We were hoping that it was going to gap up. It didn't gap up, but it gave us a pretty good entry up here above 36. And my target was between 33 and 34. We achieved that target the very next day. So FTech made 7% in a day. If you looked at the chart again, you could see that there's resistance kicking in here and another reversal formation over here. Maybe you caught a little bit more on today's decline. In any case, that's what the trade was supposed to be, a quick counter trend short, and that's what it was. So it worked out really good. 7% in a day, you can't turn your head at that. Next up is another short. We're into the shorts here, CPRT, and we were looking for a bearish engulfing candle. I'll show you where we were at that point. Here we were, and the idea was that we were looking at another Harami reversal. We wanted to see a bearish engulfing candle here. We didn't get that. so no trade in CPRT. Next up is ETP, and ETP was a triangle that we were looking at as a possible top, sort of like ADM, Archer Daniel Midland was last year. Suggested an immediate entry, so we were looking at this action over here, which looked very much like Evening Star that was confirmed, and we suggested an entry the next day. There would be the entry, and a stop would have been triggered on this day as it broke out above the pennant. So let's see what that loss came to. If you entered this day somewhere in there at the highs, you would have had about a 1.3% loss in ETP. So not anything too bad there. Currently I have a couple trades long and a couple trades short from that list that are still open, and I think I hope that we will review those trades, and I hope they're profitable pretty soon. But overall, we had a couple trades that didn't trigger, a couple trades that we lost a percent or two on, and then we had a couple nice trades, 100%, 8%, 10%, stuff like that. So it was a pretty good day as far as that goes. Well, okay, so that is that. We have a little bit of time left on this video, so we're going to take a quick look at the market. Oh boy, concerns over subprime loans, housing weakness. As I said, on the June 24th subscriber list, financials are the weakest area to watch. Briefing.com today called financials the only thorn in the side of the broader market. Weakness in financials was a main catalyst behind today's decline. The market cannot go down or can't go up much further without financials, and financials are now down 3.1% on the year. Alcoa kicked off earnings season. They came out with a lackluster report. Home Depot's guidance was disappointing for the second time this year, citing weakness in housing conditions. DR Horton also lowered their quarterly expectations due to a 40% decline in orders for new homes. So housing's in trouble. It's not likely that it's going to recover anytime soon. And the biggest disappointment today was department stores. Sears, let's pull up Sears chart real quick. Sears was warning that Q2 earnings will miss forecasts, largely due to lower sales of home appliances. After hours, we had CompuWare, and pull up their symbol, said that they expect the first quarter revenues of Q8 to come in at 278 million versus a consensus of 301 million, with an EPS of break even versus consensus of positive 11 cents. They also had the president and COO of products, Hank Yalos, resigned effective immediately. It's down 12 to 12.09 in after hours. Let's take a quick look at 3C on the hourly chart here, and you can see very prominent negative divergence had formed up over here the last couple days. We're out of time, and I'll be back again.